All right, guys, let's get started because I know Sebastian has to hop at 4 for a call. People can kind of join in. We're going to do some introductions first. So again, just some rules before I jump into who I am. We're going to cover as much as we possibly can in this webinar in an hour that you can cover when it comes to the financial options for business owners right now. We're going to stay high level. There are a number of different business owners, people from different types of sizes and scopes of business. So we're going to try to give as much as possible information, but of course everybody's different. So feel free to reach out after the call to any of us on here and we can kind of help guide you, point you in the right direction, give you some answers that are better for you. I'm probably the person with the least amount of answers when it comes to finances, but I'm a business owner, so I feel all of your pain right now. I understand where we're all at. So so my name is Catherine Doble. I am the CEO of EngageBiz. We are a marketing firm. We focus on social media, email marketing, blog writing, content creation. We've been doing a lot of helping people do live streams, webinars, and things like that right now. Social media advertising is suddenly cheap because the big brands have backed out. So we're helping a lot of businesses get social media advertising, Google advertising, and the like, and just helping really businesses reposition themselves to make or stay in the game at this point. My team, and I think some of them are actually joining us today, they're sprinkled throughout South Florida, but we have international and national clients across the globe. So we've seen it from all sides at this point. And next up, we're going in alphabetical order by last name. Our panelist, Sebastian, if you could introduce yourself.
Sure. Sebastian Canada with Bank United, and happy to be here. And my primary focus is small to mid-sized businesses and helping them with financial options, loans, and also just their banking needs. So that's it.
Perfect. All right, Tiffany.
My name is Tiffany Gonzalez. I am a licensed certified public accountant. I'm also the CEO of Accounting to Scale. We're a full service bookkeeping tax firm. We help clients with their monthly accounting and financials. We know all about what's going on in the loans, and a lot of our clients are suffering. Happy to be here.
Thank you. All right, Dana. Oh, hold on.
Sorry, I was muted. Hi, my name is Dana Quick. I'm an attorney with Bast Amron in Miami, Florida. My practice areas are insolvency and commercial litigation. I am licensed to practice in Florida, Ohio, and soon to be Texas, where I'm calling you from remotely.
Perfect. Thank you. Thank you. Thank you all three for joining us today. I know you're super busy and swamped right now, so I really appreciate it. And I think everybody on here does as well. So let's dive in. There is no COVID-19 playbook. We have no idea what's next here in this fight against the disease and how we can run our businesses and stay afloat at this point. But we're here. So we are all in the same boat. We're kind of all figuring out as we go. And obviously there have been some things put in place to help us out. And so we're looking at taking advantage of those. So, but Tiffany, can you kind of speak to first, before we get into the financial options, what you guys are doing as a firm with your clients currently and things that they should be taking into consideration right now?
Definitely. So what we are primarily focused on is how much cash a business currently has and what are the expenses that they have to absolutely incur. Most of our clients are going back to some of their vendors and attempting to negotiate terms. They're going to their landlords and attempting to negotiate, you know, when they're going to pay their rent next. Everybody's pretty much feeling it, so it's difficult. But the most important thing is how much cash do you have on hand? What do you absolutely have to pay over the next 8 weeks, 12 weeks? And when is your cash going to run out? How many days do you have on that? And are you fully partially shut down or fully shut down? All those things we're taking into account and coming up with cash flow projections.
Perfect. I agree. Okay, so let's talk a little bit about lending now. There's this PPP, EIDL, bridge loans. Like I said in my email, that if you guys, anybody received my email, it's like an alphabet soup to me of options out there, trying to make sense of what's going on here. So Sebastian, can you talk a little bit about the economic injury disaster loan and the PPP, the Paycheck Protection Program loans, and kind of run us through this chart that we're looking at here?
Sure. So basically, both of these programs, the economic injury disaster loan, which goes by EIDL, and the Paycheck Protection Program, which is known as PPP, both of these were part of the CARES Act, also known as the stimulus that was passed a couple weeks ago, and they're similar but very different. So the EIDL loan is directly through the SBA. It is a loan of up to $2 million, but it's based on the amount of economic injury that your business has had. So if it's lost revenue or something similar to that, then that's how the amount is determined. The term is up to 30 years, and the interest rate is low. It's 3.75%. You apply directly through the website, which is listed on there, but just in case anyone needs it, it's disasterloan.sba.gov. You do not have to file there's no personal guarantee or collateral with that program. The other one, which has become very popular, is the PPP, Paycheck Protection Program. So the idea behind this program is for small business owners who have employees and want to keep them on the payroll. This loan is based on 2.5 times your average monthly payroll cost, and a portion of it can be forgiven if you keep your employees on staff. And the portion of it that's not forgiven becomes a 2-year loan at just 0.5% interest rate. You apply through banking institutions. Banks are going to start accepting them tomorrow, but there's still a whole lot of uncertainty, which I think we'll get into in a little bit, regarding how that's all going to actually work. So
I'm going to bounce you to the next slide here, which talks more about the forgiveness and loan review. Do you want to talk about anything on here?
No, I mean, I think that's all pretty much the same. The one thing that is interesting is the loan review for the economic injury disaster loan appears to be 2 to 3 weeks, and is mostly based on the credit score of the borrowers. So that's always one thing that you have to think about. If you have a partner, is their credit score good? Because that's what they're going to be looking at. And with the Paycheck Protection Program, it's probably, since it hasn't officially started yet, so people have been able to apply for EIDL loans for, I think, about a couple weeks now. I don't think anyone's gotten the funding yet, but the PPP loans, we're just going to start accepting applications tomorrow. So if it's going to be 30 to 60 days before funding, that kind of goes to what Tiffany was saying as far as making sure you have adequate funds to cover that, because if the plan is to be able to keep your employees and your payroll going by using this loan, and you're not going to get the funds for a month or two, are you going to be able to still pay your employees? Because then that kind of defeats the purpose of doing the loan if you're not going to still be able to keep your employees if you need the funds within a shorter period of time. So.
Okay, great. Let's talk about, actually real quick, I'm just gonna make a reminder. If anybody has any questions as we go, drop them into the chat. I can interrupt as we see, but if not, we're gonna take questions at the end. So especially one more thing, let's talk about other options. Traditional lending, lines of credit, business credit cards. There's bridge loans out there now from the state. If you're in the state of Florida, there's bridge loans. There are different types of options for different states. Then of course there's fintech, factoring, et cetera, and so forth. Can you kind of give us a little bit of an idea of where these all land at the moment?
Sure. So so this is probably one of the perfect times to, when your bankers tell you, you should have a line of credit in place, you should have the access to capital in case you need it. This is kind of one of those instances where, businesses that have access to capital or, have some liquidity on their balance sheet, that this is going to be very helpful to them. Trying to go to your bank now and applying for a line of credit to help you because of COVID-19 is probably not something that you're going to be able to do right now, mostly because the banks are a little overwhelmed. And then plus, they would want to make sure that you're able to get through this. And so, traditional financing, if you didn't already have that in place, is going to be kind of hard to get done. There is also the program, as Catherine mentioned, and there's a link there to the floridadisasterloan.org, which is for people in the state of Florida. And I think each state also has something similar, whereas short-term financing at low to no cost in some cases. And then, we kind of also put fintechs and factoring. There's always other alternative lenders out there. A lot of times those are going to be based on your accounts receivable or your current inflows of revenues, and if that's dried up, then it's also going to be hard to qualify for those as well. So this is kind of like a really just an example of, if you had things already in place, then you can obviously utilize that and then also apply for the additional financing as well.
Okay, perfect. Okay, perfect. So let's talk the pros about each option. Let's get the good stuff first. So Tiffany, do you want to really quickly go over what are the pros for the PPP? Let's do PPP first. Yeah, for the Paycheck Protection Program.
Definitely. Okay, so the Paycheck Protection Program, the reason why it's so popular is because it has such a large amount that is going to be forgiven. The EIDL loan only allows up to $10,000 as an advance grant that you don't have to pay back. So you're capped at $10,000 free. But the PPP program, if you have a large payroll, this could be substantial, tens of thousands for a lot of businesses. So essentially you are going to receive loan funds that will be fully forgivable as long as you retain all of your employees, majority of which. If you don't retain all your employees, that forgiveness calculation changes. If you reduce the amount that you're paying your employees when you bring them back, that forgiveness changes as well. You also have to use 75% of the funds on payroll. So there's a huge pro here if you are still operating, you're still paying your people anyway, you have a large payroll, or you've been paying yourself in the past and you want to continue to pay yourself, but you can't really afford to do so, because that's an important thing to mention. There isn't a lot in the bill about sole owner companies, right? Like sole owner S Corps, sole owner LLCs. Honestly, if you've been paying yourself on payroll before, it shouldn't be an issue. What might be an issue is if you've never paid yourself a salary on payroll, and now as a result of this program coming out, you want to start paying yourself a payroll. That might definitely be an issue with forgiveness. But low interest rates, if you don't have a forgiveness portion, 0.5%, I've never seen that before. No personal guarantees, no collateral. It's almost impossible to get loans like that. And you can retain all of your talent and the team that you've worked so hard to build. I wanted to just answer that question I saw about whether one partner is a citizen or not. That's important. So on the EIDL application, it does ask you to list every owner who owns 20% or more, and it does ask you if they're a citizen, but it's not a disqualifying question. So at this time, what I would say is apply anyway. But on the PPP program, there is a question about whether or not you're a US citizen or a lawful resident, so a green card. And in that instance, if you answer no, you are disqualified. So the PPP program would not be the program that you'd go with if that's your scenario. As far as the EIDL loan, so if the PPP is so great, why would I do anything else? The The EIDL loan has a much longer term. So if what you're mainly focused on is getting cash into your business as soon as possible, you're okay with taking on debt, this is almost a mortgage scenario with 30 years at 3.75%. It's going to be approved much faster. So if you're running out of cash, this is the way to go. Still no personal guarantee, no collateral. There is a personal guarantee, but over a certain amount of the loan. It's a very large loan. It depends on your economic injury. And of course, on the grant portion, you do have limited restrictions on the use, but on any other portion, you can use it for any kind of working capital. So what I've been recommending to my business owners is, if you're running out of cash, apply for that EIDL loan right away. If payroll is your primary concern and you're going to use these funds primarily for payroll, don't apply for the EIDL yet. Apply for the PPP starting tomorrow, because you're going to spend that money on payroll.
Perfect. All right, Sebastian, we're going to jump into you're going to tell us what can go wrong with either of these two options. But before we do that, I did get a question. And I know that you've kind of spoken to this before outside of this forum, so I think it's a good one for you to address here. Are banks fulfilling obligations to fund their existing line of credits? Are they scrutinizing whether credit lines can be reduced?
I can only speak for what Bank United is doing, but I could also generally say across the board too. So, we are not forcing customers to utilize their lines of credit, and we are not reducing their lines of credit if they already have them in place. Unlike a situation, with the financial crisis where people had home equity lines and the collateral, had lost value, so banks froze or reduced lines. That's really not the situation here. If a bank was approving a line of credit, and it's not a reviewable line of credit, meaning it's, basically it's available for them to use whenever, then, we're going to keep it in place. Again, I can't speak for what every bank might do, but, that's what I know. And then again, also, I believe all the banks, including, Bank United, we're going to be prioritizing with the PPP program, our existing client base. I think the idea behind this is not to go after other banks' customers or try to get business from Bank of America or Chase or whomever. I think the idea is that these are low-cost loans to the borrowers, and the banks want to make sure they're taking care of their clients first. So that's I hope that answers that question.
Yeah, and I think that leads us to our next slide, which is the cons, the ones I just pulled up, the cons for Paycheck Protection Program, and the piece there about potentially limited to your current financial institutions. I know that I've heard from some people that they've called their larger financial institutions that are having trouble getting through to them, and so that's one of the challenges, is that the banks are processing these the PPPs. Can you talk a little bit more about the cons? And I'm going to get to everyone else's questions in a minute, but can you talk through the cons?
Sure. So yeah, as we kind of mentioned, we don't really know, what the approval time is going to look like. We're just now going to start taking applications as of tomorrow. The term, and originally when it came out, they stated that the term was going to be 10 years, and then it was shortened to just 2 years. So, if you have an unforgiven portion of the loan that's $48,000 or something, that's going to be pretty high payments. You divide that by 24 basically, and it's going to be a pretty high monthly payment. And we don't know exactly how the application process is going to work yet, or the forgiveness process is going to work yet. So, in essence, you're putting a lot of faith in how it's going to work, and the SBA, and how that it's all going to work out, and you don't really know. And when times are uncertain, it's kind of it's a little unsettling for people to try to figure out whether they should or shouldn't do this. And like we said, it's limited to your current financial institution. I do believe, personally, I think every bank is trying to figure out the best way to process these for their customers. And, and I know that, like you said, there hadn't been, there's been a lot of people with larger banks that aren't able to get a hold of anybody, aren't able to talk to anybody. But I think come, tomorrow and hopefully next week, especially, I think a lot of them are going to have an online platform. I know we're supposed to have one as of tomorrow too, where people we can send a link out and they can put in their information and basically apply that way. So, hopefully it'll end up getting streamlined, but, as we're talking, it's all still being figured out. And then the kind of the last bullet point is, companies that have employees with high salaries of over 100,000, those are not eligible to be reimbursed. So, depending on the industry, maybe you have a lot of high salaried employees, or even if it's for the business owner themselves, that would not, they wouldn't be able to get that amount reimbursed. Doesn't mean they still can't get the loan. It's just that part is not going to be forgiven.
Great. Okay, and then what about the EIDL?
So the EIDL, it's based on credit. So if the credit score is not good, it's going to be less likely that it gets approved. Like Tiffany said, there's a portion that can be forgivable, but it's only $10,000. The rest of it must be paid back, and you have to prove economic injury. So, there might be a business that is a lag, something, trying to think, if you're manufacturing masks right now, you don't really have an economic injury, but, even a business that's trails like 60 or 90 days, maybe they're still bringing in revenue, but, they're not going to feel the results of this for another month or two. Versus like a restaurant that is already feeling the results of this. So, they might not be able to show any economic injury as of yet.
All right, perfect. All right, Tiffany, can you answer the question about whether or not you can apply for PPP and EIDL?
Yeah, so you can definitely apply for both. What happens though is that the forgiveness on the PPP ends up being reduced by any monies you received as a grant on the EIDL. So let's say you apply for the EIDL, you receive the $10,000 grant that is tax-free. When you apply for forgiveness with your lender, that $10,000 will be reduced from any forgivable portion. So you can't double dip on the free side, but you can definitely take advantage of two different loans available to you. My recommendation though is that if you're going to take advantage of the PPP program, you first apply for the PPP program. It's a lot more money right now than the EIDL, depending on your economic situation. And one of the questions on the PPP program is whether or not you've applied for the EIDL already and received funds. So you don't want that to hurt your process with the PPP program, especially since it's such a large amount. And yes, you can only apply through banking institutions or what they call approved lenders for the PPP. It's backed by the SBA, but you go through the banks.
Okay. And then there was one other question about whether or not an independent contractor can apply for PPP, and if so, if they can apply with their 2018 tax return.
So the PPP program is primarily based on payroll, and I've seen preliminary lists go around, and the majority of what they're asking are payroll tax forms, 940, 941, W-2s, 1099s you would have filed in 2019. So I'm not sure that you can actually use a 2018 income tax return. And I do know you can apply as an independent contractor. It's one of the check boxes up at the top to select, but I don't know what documentation they would ask you to then as a supplement. I'm sure, Sebastian will know that at some point when the banks have rules on it.
All right, perfect. Okay, so I know there are a couple of some more individual questions, and I think we'll kind of get to those at the end, but let's get back to this. So we've talked about lending options, but what if lending is not an option? Let's talk about all pass. So Dana, can you talk a little bit about the Small Business Reorganization Act and then now COVID-19 playing into it and the CARES Act?
Absolutely. So there are going to be some businesses that do not qualify for the EIDL because of credit scores, or they can't wait the 30 to 60 days to get the money through the PPP. And so what can they do in the meantime? Fortunately, for borrowers right now, the courts are being very lenient on defaulted borrowers. There's really not a lot of activity going on as far as collections, actions, or anything of that sort. But eventually the courts are going to reopen and lenders are going to start calling on these debts. One of perhaps the newest feature of the Bankruptcy Code is the Small Business Reorganization Act. This was passed back in the fall and just became effective in mid-February. So we haven't yet seen a lot of activity under the Small Business Reorganization Act, but I expect that in the coming months we will be. Some of the features, some of the benefits to the Small Business Reorganization Act, or the SBRA, is that it's a hybrid between a Chapter 13, which is an individual wage earner bankruptcy, and a Chapter 11, which is a business reorganization. And it allows for a streamlined approach to a reorganization for a small business. There are significantly reduced disclosures required under the SBRA for qualifying businesses, making the process of getting from the filing of the bankruptcy to an effectuated plan much quicker and cheaper for that business. It also allows owners to keep control of the business by giving them 90 days exclusively to file a plan without worrying about any of the creditors being able to file a competing plan. In a typical Chapter 11, you get 120 days, but the streamlined 90 days for the SBRA, I think, is pretty generous, considering that it removes at least one of the hurdles that's required under a Chapter 11, which is a disclosure statement. And it greatly reduces the requirements that are needed under a plan of reorganization. It takes a list of 15 to 20 items that are typically found in a plan and whittles it down to 3 or 4 essentials. And it also gives business owners that may have funded part of their business with a lien or a mortgage on their primary residence the ability to modify that mortgage. That's something that's not typically available in a Chapter 11. And that's a very strong incentive for the small business owner, a lot of whom do commingle their personal assets with their business assets in order to get things running. One of the other benefits and part of the streamlining is that you are able to confirm a plan without obtaining the consent of impaired creditors, meaning that you can change the treatment of a creditor's debt, making it less favorable to them. And so long as it is still reasonable, you do not need them to approve that treatment. And that makes the process of getting a plan confirmed much easier for a small business owner. And perhaps most importantly for the business owner is shareholders can retain their equity. Usually in a reorganization, there is something called the absolute priority rule, which requires that every creditor be paid in full before equity can retain its interest. And here, equity can retain its interest as long as the creditors are being treated fairly under the plan, and that's something that the court would determine at the time of approval. You can go to the next slide. But all of those powers come with certain requirements that debtors are going to have to meet. One of the most important here is that in these SBRA cases, there is going to be a trustee appointed, and the trustee will oversee the plan process and distributions. That's not something that typically happens in the Chapter 11 unless there is some wrongdoing by the debtor or there is some waste of assets. A Chapter 11 trustee is pretty rare. But on the flip side of that, in an SBRA, there is a committee of creditors is not allowed to be formed unless there is some wrongdoing by the debtor. A committee of creditors can be formed in a Chapter 11 if there is substantial interest and the U.S. trustee approves, but it greatly increases the cost of administering a Chapter 11 case. And so for SBRA, you won't have to worry about that unless there is some for-cause reason as determined by the court. One of the more troubling and potentially more troubling aspects of the SBRA is that it requires that a debtor must put all of its projected disposable income into the plan to pay creditors. And this is considered, this disposable income is all income not reasonably necessary for the operation or preservation of the business or necessary for the debtor to maintain their family. It doesn't say, though, whether the funds necessary to maintain or preserve the business includes reinvesting in that business. So are you simply working to pay creditors for the period of the plan? That has not yet been determined exactly what that language means, because we haven't really gotten there in these cases, because this section is so new. Also, you're going to have to complete all plan payments in order to get a discharge of the debts at the end. Those plan payments are going to be 3 to 5 years in length. So you want to consider that before you think about whether SBRA is something that you can use. Can you go to the next slide, please?
Yep.
There are some other, oh, I'm sorry. This is where the CARES Act comes in. Under the SBRA, small businesses were defined as businesses that have non-contingent liquidated debt that's both secured plus the unsecured debt of 2.7 million. So all of the debts combined had to be less than 2.7 million. For the next 12 months, the CARES Act has extended that to 7.5, and that's going to bring in a lot more businesses under the awning of SBRA that could use this if they chose. You don't have to use SBRA if you qualify, but it is an option for you as opposed to a Chapter 11. And then there are other insolvency options to consider. Chapter 7 is always an option. That is a liquidation if your business is not going to be able to withstand the current situation. If you need to liquidate and cease operations, Chapter 7 might be an option for you. You still have the option of a Chapter 11, understanding that it comes with different requirements. It's going to be more expensive than an SBRA subchapter 5, and it's going to take a little bit longer, but it may have the bells and whistles that you want for your reorganization. Short of bankruptcy, there are some state court options that may be available. In Florida, where I primarily practice, we have something called an assignment for the benefit of creditors. Many states have something similar. It's like a state court bankruptcy. Typically, it's cheaper and faster than an actual bankruptcy. But in those situations, you're usually shutting down the business as well. So it's pretty much a liquidation. And then there's workouts, which is something that my firm specializes in. We like to say that we're a bankruptcy firm that tries to keep our clients out of bankruptcy. So oftentimes somebody comes to us and says, I need to file bankruptcy. And we look at the situation and say, well, maybe we can work out this one problem or these two problems that you're having, and you can continue with your operations. And sometimes we're able to do that. And in those situations, it's a matter of being able to know what you can do with what's left. And the sooner that you can get to somebody that will help you with the workout, the better your options are for actually maintaining the business. I would caution that as people are looking at lending options here, while this doesn't apply to the EIDL or the PPP, if you're looking at lending options outside of that, I would be wary of personal guarantees. A lot of my clients that have small businesses that come to me, we can do a bankruptcy, we can wrap up the business operations, but sometimes we can't extinguish that personal guarantee. And so not only is their business defunct, but sometimes they're still on the hook for those funds. We work really hard to try to resolve all those issues, but it really depends on the lender whether or not that's going to be possible. And I would also tell people right now, as they're considering their options, to take a look at the contracts that maybe they're having difficulty fulfilling. See if they have a force majeure clause. What that does is it may relieve you of your obligations under a contract if it becomes impossible to fulfill because of circumstances beyond your control that were unforeseeable. And I think that in some instances, in some cases, that COVID-19 is going to be that the unforeseeable, unknowable, uncontrollable factor. And we're going to see a lot of litigation in the coming months about force majeure clauses. But if you have one, take a look and maybe talk with that contracting party and see if there's something that you can work out together.
Perfect. That's really good insight, Dana. Just gonna, before I jump to the how to apply question, we had a question. So Anush said, and I think I'm gonna throw this to Tiffany, from another webinar today with a financial advisor, I was told it may make more sense to not apply for PPP, but rather furlough or lay off employees or contractors to apply for unemployment, since at minimum they would be getting $700 a week with a $600 additional from the federal case-by-case basis. With uncertainty of what will happen with PPP, does that seem like the better route to go versus rushing for PPP? Tiffany, you want to take this one?
This is going to depend on whether your operation is open. If you're completely shut down, you're applying for the PPP to pay your employees, but you're not necessarily bringing revenue in. So I've had this conversation with several business owners who say, why would I get the PPP if I'm not open and I don't need to pay employees? In that instance, sure, you would definitely send them to unemployment and they would get unemployment. But unemployment will always be a fraction of someone's pay. It will never be what they got paid when they were working for you. And there are many people that might not be able to survive on $700 a week if they were making double that. So what I would say is, if your business is partially shut down, don't furlough them and send them to unemployment, because they're not going to work for you if they're getting unemployment. Also, you know, it's goodwill for your team to try to keep them together, to you know, you've worked this hard to build that kind of team. You know, unemployment has some psychological effects on people. And the truth is, if you send them to unemployment, they may not return. They may not return, and they may see that as something negative. So in the end, you know, every business owner takes a lot of risk, and you have to make the best decision for your business. But the PPP program was set up primarily for that reason, so that employees would still get paid at a full amount and not have to go through the unemployment route. And then again, it depends on the numbers. If your employees were already making, you know, smaller figures and unemployment is actually pretty sufficient with that additional 600, then, you know, that might make sense for you. There was another question I saw in here, Sarah, that's asked it twice, and I want to answer that one too.
If I have a C Corp and was not on payroll last year until January of 2020, which option will be best for me to apply? I've lost 97% of my clients at this time.
Definitely the EIDL. Because the Paycheck Protection Program is going to rely primarily on payroll reports and you don't have them, I would say go for the EIDL. The only thing is that that is going to be primarily a loan. You can request a $10,000 advance. That would be the free portion. And then the remaining is going to be a 30-year term at 3.75, which is an extremely lucrative loan, but it is still a loan.
Perfect. Yep. All right. So let's go forwards. So if lending is an option, how do you apply? So Sebastian, tell us, as of right now, who should you speak to at the moment? So,
yeah, so basically, you know, your CPA, your bookkeeper, your banker, if you have one, you're an attorney, any trusted advisor. I know financial advisors are offering help. A lot of CPA firms like Tiffany's and, are offering assistance to their clients. So.
Right. I guess they're the ones that have read through all the documents and know it all.
Right. Right.
Perfect. Okay, so let's talk next step. So we've decided that we're going to apply for a loan. We've talked to everybody about it. What do we do next, depending on which one we want to do?
Is that me?
Yeah, sorry.
Okay. So if you decide you want to do the PPP, you would contact the bank. There are sample applications out there. They have supposedly, as of what time is it now? 3:45. They're supposedly they are still not finalized, which means they could change. And like I said, I think the plan is that a lot of banks are going to build out an online portal so that people can just click on it, enter their basic information, and then either upload the documents or, the banker can upload the documents. I guess, we're going to have to figure out how that all will work. And then obviously also how it gets sent to the bank. With the EIDL, it's a little bit simpler. It's an online application. Everything is done directly through the SBA's website. And that's how that loan gets processed. I also think there was a question, there was 2 questions I saw. I don't know the answer on 100% of it, but Beth asked if there's an early payoff for EIDL. I don't think there is. Have you seen that, Tiffany?
No, that I've seen on both, there is no prepayment penalties. They want you to pay back these loans.
Right. And then the other one, there was a question about the credit score. I would assume, so that the normal SBA minimum is a hard line credit score of, I believe it's 680. That's on the normal SBA 7A or 504 loan, which are other SBA programs. So I would think that that would apply in this case as well. It's probably the same criteria. And I don't remember if there was anything else I saw on there, but.
I've collected some very personal questions that we're going to filter out afterwards. So, but if you guys, again, just drop your questions in the chat and we'll try to get to them or follow up. So outside of lending, Tiffany, are there other financial relief options out there? What else is there that we need to know?
So if you decide not to go the route of any of these, loan programs, such as the Paycheck Protection Program or the EIDL or a bridge loan, you have the ability to receive a payroll tax credit. So again, same circumstance applies here, that you continue to pay your employees, but they are giving a payroll tax credit. This one is about something else, but they are giving a payroll tax credit up to a certain amount. In addition to that, you pay employer payroll taxes for having employees. They're allowing you to defer those taxes for a significant amount of time. So it's over 2 years, with half of it due in 2021 and the other half due in 2022. So these are ways for you to continue to retain your employees, not take on any debt, but still receive some financial benefit of doing so.
Sorry, the small business tax.
And this is related to the retention credit that I was talking about. So it's 50% of the wages that you pay your employees from March 13th through December 31st. To qualify, you have to be fully or partially suspended as a result of the government order, or you have to have experienced 50% reduction in your quarterly revenue compared to the same quarter in a prior year. So if we're looking at second quarter, April to June 2020, we would look at April to June 2019. And this is only available if you do not do the Paycheck Protection Program. I've done the numbers a few times, and most people get a bigger relief from doing the Paycheck Protection Program than using this credit. However, the Paycheck Protection Program comes with the uncertainty of how it's going to be forgiven, the uncertainty that it will not be forgiven at all, that there's still a portion that you owe. And so some business owners don't want to review all their financials, don't feel that they might qualify. This would be something lucrative, and I just thought of something else. Someone in the chat is asking about whether or not someone's a citizen. As an owner, this would be something that they could take advantage of and still get some relief, because this is unrelated to the owners and their backgrounds and where they're from. So this is another option that's available to business owners.
Perfect. All right, we have some time for some questions. I wanted to throw one question out there though, because I think, Dana, you had some really good points about if you don't qualify. Can you share maybe a little bit of, if I'm sitting down and thinking, I probably don't qualify, or maybe I just don't think it's even worth applying for some of these loans. My business is in shambles. Where do I go? Can you provide maybe some tips and direction on what business owners should do at that point?
Yeah, absolutely. I think that, when businesses are running low on cash, the first thing they think of is to get a loan. But, maybe consider whether or not this is a situation where you could look for an investment of equity from somewhere. There are still investors out there who aren't necessarily putting their money into the stock market, and maybe they're looking to invest in a business that has potential on the other side of the coronavirus. I would also tell business owners that are struggling to pick up the phone and call their lenders themselves. See what kind of relief the lenders are able to provide directly. You may not get everything you want. You may ask for a 90-day extension and you may only get 30. That's okay. Take the 30, call them back again in 30 days. See what they'll give you then. I think that everybody is uncertain about what's going to happen as we move forward, and I think it's reasonable. And so if you're simply just kicking the can down the road right now, that's okay. These loans aren't going to be for everybody, but there are other options as opposed, between loans and shutting down. So you're empowered as a business owner to control some of your own destiny. I would say look for help in unique ways, and don't be afraid to ask for it right now, because I think that there's no big company right now that's going to want to be the poster child for being inflexible in the midst of this financial crisis.
There are ways to control things, Dana? I'm shocked.
I want to add to that. So the stimulus bill actually contains a large amount of money being sent to SCORE, the Small Business Development Center, and the Women's Business Center. And these are all free programs that the government has always offered through these organizations. You can log on to their websites and look for the local chapter. They're receiving a significant amount of funding so that they could provide business owners with free or low cost training. So like Dana said, there are other alternatives into seeking advice and seeking help if you're in a situation where you can't afford to do so.
One other thing that I forgot to mention is take a look at your insurance policies. Do you have coverage for this kind of an event? In South Florida, we heard about things like music festivals being canceled, the electronic music festival being canceled.
Okay.
In Texas, where I'm at now, the South by Southwest was canceled, and none of them were able to provide refunds because their insurance didn't cover this specific kind of event. But insurance policies are tricky. Take a look at yours. Maybe you do have some coverage that is available to you.
Great. Perfect. Okay, we did have a question. We're going to wrap up in just 5 minutes. We have 5 minutes left, but Mike had a question. Is the 680 FICO required also for the 10K grant? Tiffany, I see you shaking your head. Do you want to answer that?
The 10K grant should be given to you even if you're denied for the EIDL. So you don't even need that. Mm-hmm.
Okay, perfect. We had a question about, okay, so I read that if your employer opting for the economic stimulus package tax credit for retaining your employees on payroll, up to 5K per worker, you're not eligible for an SBA loan. Is that true? If so, does this apply to either PPP or EIDL?
PPP, I mentioned this earlier, you can't take advantage of a payroll tax credit and get the PPP program. Both of those things are related to payroll. EIDL isn't necessarily related to payroll. It's an economic injury loan to help you with working capital.
Okay.
Michael also asked about the state and federal. There are states that are offering loans. Florida, for example, is offering a bridge loan. It's something they've always offered. It's not a whole lot of money. It's a small interest rate. It's only a year. And again, it's a state by state. New York has a different thing going on. California has a different. So you could definitely apply for a state program, but those are programs that have always existed. They're unrelated to COVID-19.
Great. We had a question regarding nonprofits, and I think this one was more for Sebastian. So PPP application asks for owners. As a small nonprofit, I list my officers, all officers, or only select officers? Do you have any answer for that question?
I guess it would be the primary person. I actually have one that is planning to apply, and they listed just the basically the main executive director, I guess you would call her, of the organization. So again, that's kind of one of those you know, they didn't really plan for that when they put together the application or you know, think about that type of a scenario. But, you know, definitely, you know, I would say, you know, you don't need to list if there's, you know, 15 board members. I don't think it would be necessary to list all their information there.
Great. And probably the best information for anyone is to reach out to their personal banks and
Right.
get the answers to these questions, because everybody may have a little bit different way that they want to do it. Okay, so we're gonna wrap up now. We're getting close to time. Sebastian has a 4 o'clock call.
I do.
You do.
I'll probably have more information after that call.
So you can reach out to him after 4 o'clock.
Yeah.
At probably around 5 when he's going to eat dinner. Do that. No. If we get any more information, how about this? If we get any more information, we'll circulate an email with that to everybody who's on the call. Again, though, we'll be sending around the slides as well. This is all of our contact information. Feel free to reach out to any one of us and have any of your individual questions answered. If you have any follow-up, if you run into any problems, anything like that. Obviously, I am marketing, so I'm not going to be super helpful for the financial side, but I can help you guys come up with creative ideas at this point. But feel free to reach out. And I want to thank Dana, Tiffany, and Sebastian for joining us. We had over 70 people sign up, and there were over 40 people that actually ended up joining. So this is obviously a very hot topic for business owners right now. So I really want to thank you guys for taking the time. I know you're all really super busy. So thank you. Thank you
for hosting.
No problem.
Yes,
Thanks
thank you
everyone.
for having.
All right.
Thank you.
Thanks, guys. We'll talk soon. Thanks, everyone. Good luck.
Bye.
Bye.